We're about 2.5 minutes to go for market opening. Our guests are here with us. So we've got Mr. Ambareesh Baliga as well as Mehraboon taking some questions on what they see the markets doing over the next few months to come. Let's start off with you, Mehraboon. Your take first off on what's been happening.
Honestly, I think we need to accept the fact that we are in a crisis, irrespective of what the policymakers may want us to believe. I think the market sentiment is getting more and more and more pessimistic every passing day. I think for the time being, the rupee has become a major headwind. And if the rupee stabilizes at around the present level, consolidates, doesn't go below 61.80, I think there's distinct possibility that the market may show some resilience for the time being and may move up a little bit further up from here. But this is not to state that the time is ripe for going ahead and doing investments right now, because the macros are completely clouding the micros and the corporate performance. So while you have some decent corporates, like I personally like Lovable Lingerie, VST Tillers and stocks like that, but the fact is, who wants to buy? The macros are, as I mentioned earlier, clouding the micros completely right now.
All right, and that's weighing down overall on investment sentiment at this point as well. Quickly, Ambareesh, your take?
Yeah, I mean, surely, like what Mehraboon said, it is a sort of a crisis situation, so it requires actions like what we saw in the last 2-3 days. I mean, people may call it a regressive step, but I don't think the government really has much of a choice but to go ahead with all these, harsh steps at for the time being. But the big question is, how do foreign investors look at it? Would that remind them of the '97 Asian currency crisis? If that is the case, yes, I suppose we could see some more sell-off from the foreign investors. I think that's what is worrying me. But for the time being, if you're talking of the index, I suppose we are still in that band of 5,500 on the lower side and about 5,750, 5,800 like on the higher side. But then if you're talking of the next few days, I see the markets going more towards 5,500.
All right, so more on the downside than on the upside, and probability of that seems to be a little high. Opening bell going off in about 9 seconds from now, so there you have it on your screens. The first trades, 5,700 on the Nifty, 19,252, that's down about 0.6% on the Sensex. Stocks on your screens losing out. You've got Axis Bank down 5%, ICICI Bank down another 1.5%. Axis Bank on the fact that it's been excluded from the MSCI index, that's taken a big knock to the chin. BPCL is down 1%, so some give back after that 6% pop on Wednesday's session. Tata Motors is down 0.33%. DLF is down about 2%. JP Associates 2% cut. Tata Steel is down about 0.5%, was up 3.5% Wednesday's session. Good set of numbers. HCL Tech recovers, was a big drag on Wednesday's session, one of the top losers. Today gains. HDFC Bank's down 0.5%. Bharti Airtel is up 1%. Hindalco is down 1%. KN India up a quarter at 310. ICICI Bank's down 1.33%. ONGC 1.33% higher, and L&T is down about 0.75%. Axis Bank's now down 5%. That's your worst performer on the index right now, followed by JP Associates, DLF, IDFC, and IndusInd Bank. These are your top losers. So banks again reeling under some amount of pressure. Titan Industries, and you should pull up all of the other jewelry makers as well. Titan's down about 10.5% on some curbs been reinitiated by the RBI. A little bit of a flip-flop there with what the RBI is doing with gold particularly. PC Jewelers is down 5%. TPZ is down another 2.34%. We'll try and get you an opinion from the management of Titan as to how this will impact them, because remember, earlier on when their results had come out in their press conference, they had said that with gold leasing being back, their model is sustainable, and the stock had actually rallied post that announcement, and now looks like that's a little bit of a haze at this point. Financial technology is down another 6% in this session. Brokers not really satisfied with the kind of payment schedule that they have put out. Stocks at 139 right now, and I believe MCX also would be doing the same. So HCL Tech, your top performer. Axis Bank, your worst performer on the Nifty. Just quickly running through the broader market performance as well, and what's happening there. So starting off with the losers in trade before we get on to the gainers. We've already spoken about Titan. There is financial technologies. Jain Irrigation reported numbers, stocks down 6%. Then you've got Chambal Fertilizers down 5%. Sri Lanka Sugars also numbers down about 4%. SR Oils down 4%. Then you've got Jindal Stainless, that's down 3.5%. Karur Vysya Bank, another smaller name there, which is down 3%. Core Edutech's down 3%. Glenmark's down 3%. And some of the other names like GMR, Polaris, Orchid Chemicals, all down to 2.5%. So that's the market opening for you. Slightly, the undertone is negative today. So let's see where this goes. A quick take on banks, Marabun, at this point?
Very negative. I think I feel nice about one thing, and I'm sorry I'm sounding a little bit sadistic, that over the last 5 years I've not recommended a single public sector banks. And looking at SBI numbers especially, I personally feel that there are a lot of questions in my mind. I think the sticky loans, the way the bad debts are going up, and I really don't know what's going to happen maybe a year, 2 years down the line. And this applies to the largest commercial bank in the country. I wonder as to how others are there right now in the picture as far as valuation goes. It's nice to say that price to book value is 0.81, but if you have the book in which nearly 30-40% is going to become bad, then I think the book value honestly doesn't make too much of sense. So continue to remain very negative. As far as the private sector banks go, I think I was always stating one thing, that is the management quality which really counts as far as banking goes. Banking is not an easy area to be in. You need really quality personnel. And I think that is where HDFC Bank and IndusInd Bank scores. But what the RBI has done over the last 1.5 months, I think has definitely put the brakes as far as the progress of this bank goes, at least till the time these measures are in place. We need to wait for the September numbers and find out if it's going to affect the credit growth as far as this bank goes. If you have a downgrade coming for even the private sector banks, then what the reaction we have seen could continue for some more time. Otherwise, honestly, I think it's a great buying opportunity for HDFC Bank and IndusInd Bank. But for the time being, I will shy away from giving a recommendation, a buy recommendation on them, because I would like to wait for the September numbers and see as to how the brokerage houses come up with downgrades, if any, for even them. But as PSU banks goes, a certain no, irrespective of whatever valuations you are providing them to me.
Okay. Axis is now down 6%, and I think the rupee is also given up all of its early morning gains. So the measures have not seen any sort of a positive knee-jerk reaction on the currency front, at least. So 61.44 to the dollar is where the rupee is now at. So early morning opened 0.1% stronger, and giving that back as well. Titan is now down 12.5%. Ambareesh, a quick take on Titan.
I think with these measures, they're clearly putting a cap on most of the jewelry makers, including Titan. And I suppose, that loss of margins will clearly show up in the, like the results of the next few quarters. So even at these levels, I think one should be exiting Titan, because the pain is there for some more time.
Okay. Are you focusing on any specific stocks? And also if you could comment on Tata Motors. The stock was the top performer on Wednesday's session. You've started getting wholesale numbers for the group. The wholesale numbers were stronger at 87,000 plus. For JLR also, the numbers on the wholesale count are looking positive. So do you think that the stock could see more upgrades coming in?
I think, whatever move we saw was clearly because of the numbers, but then, going ahead, we are a bit apprehensive of the JLR numbers, especially as far as China is concerned. So, I would suggest that in this up move, possibly one should lighten up to a certain extent. And for the markets overall also, we see a lot of pain, especially in the next 3 to 4 months. So, we are in fact asking our clients to get into, a bit of cash. I think liquidity is always best to hold on for the next couple of months, because I suppose you'll get a lot of great opportunity at much lower levels.
Okay, Marabun, you have a comment on it?
I think I have been quite positive on Tata Motors for quite some time. Unfortunately, my view doesn't, right now, at least I agree with my friend Ambareesh. We have been positive on Tata Motors, and I think the JLR story is yet to possibly come out in the full. I think the new markets that the company is planning to enter, along with a slew of models over the next 2 to 3 years, I think we have a very conservative price target of around 475 for the stock over the next 24 months, which is a clear return of around 60% from here. But more interesting opportunities coming in Tata Motors DVR. I remember in March, Tata Motors was quoting at 303, and DVR was at 172. Today, Tata Motors is around 315, 16, and the DVR is quoting at around 148, 149, 150. So the discount which is there is possibly at a peak. So I personally feel that investors, especially the retail investors, the HNI investors, should possibly look at DVR as a better option, because the margin of safety of at least 3% versus the Tata Motors stock.
Anything else that you like?
So I mentioned earlier, I think we like individual stocks like a Lovable Lingerie or BST Tillers or Glaxo Consumer. We are looking at companies with good business models, with a good cash flow, not over leveraged, no problems with corporate governance. So we like those type of companies. But as I mentioned earlier, the problem is you recommend them, you like them, do you buy them? The answers are unfortunate no, because the fact is that the macros are so much clouding over us that every second day I think you have a new problem coming in front of us. So RBI and the government is doing what it can do, but the curves which the RBI has put in is going to possibly boomerang in a different way in terms of the inflation numbers. Look at oil. I think nobody is mentioning oil was $100, now it's $110, $111. So we have a new problem coming every passing day. To buy in the present scenario, I think, requires honestly a lot of guts. It's nice to say that in an economic cycle you have the downs the period, and it is during this period that you should go and buy good businesses, because ultimately 2 years down the line you will think, oh, I made a real big money because I bought it at the right time. It's nice to say that, but looking at the way the portfolios are right now bleeding, it requires much more than courage to go and recommend the stocks.
Got that. Mehraboon, thanks very much for joining us. There was some comments coming in from Mehraboon Irani there. Ambareesh, one word from you as well. I mean, so far you've seen the earnings momentum, and how have you read into it? And anything specific over the next quarter in terms of, you're not going to see a drastic change, at least for few sectors like banks, but this time around metals did well. You had IT stocks outperforming once again. Where were the pluses and minuses for you in terms of earnings?
No, in fact, clearly, if you're talking of sectors, I think pharma and IT have outperformed, and I think the results also clearly show that there have been a few surprises as far as specific stocks are concerned, especially in pharma. We had a surprise from Ranbaxy, and that's clearly shown in the sort of thumbs up which the stock got. And among the metals, clearly Tata Steel, the results were much better than what we expected. So, after the results, we have seen that move. But then overall, if you're talking of metals, we still see the cycle to be down at least for the next 1 or 2 quarters. So, at these levels, we are not recommending metals, but we are asking people to keep a watch. Maybe once the cycle turns up, I suppose one should look at buying it. But that's, I think, still about 3 to 4 months away. And overall view on the markets, which I mentioned earlier, since we are negative on the markets, at least if you're talking the next couple of months, we are asking people to get into cash, because I suppose when there is more of panic on the street, I think that should be the time to get in, because that's the time you'll get quality stocks at throwaway prices. So I think it's best to hold on to cash to a certain extent than invest right now and go through that pain of the markets going down.
Okay, got that. Ambareesh, thanks very much for joining us. Appreciate your comments. In fact, let's pull up Axis Bank once again.